Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Rebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We're talking a little early today, so we're going to talk about markets through this point, and really not a great week for cattle.
That's right. Another down week on the cattle side. If we look at cash-fed cattle prices, down $3 this week. Even on the feeder cattle side, those feeder cattle markets, I'm going to call them $1 to $7 lower this week. On the futures side, also lower with that June live cattle futures contract down 75 cents. And the August feeder cattle contract lost a little more than $5 this week. So tough on the feeder cattle side of that equation. The choice box beef price lost $2.50 this week. You know, we had weakness across the board except for briskets. When you look at those components, so tough on the box beef price as well. That's certainly pushing that choice box beef price much closer to where we were a year ago at this time. We're only now $4 above year ago levels, so pretty close, especially relative to where we started the year. On the hog side, cash barrow and gilt prices this week were lost about 75 cents. While that June lean hog futures contract closed up nearly $4 this week, so strong on the futures side again. The pork cutout value lost $3 this week, and really a lot of that had to do with just where belly prices were. A lot of volatility, some up, some down, but it certainly was a roller coaster ride there.
I think roller coaster continues to be the description that we can have about every market conversation that we've been having lately. As we take a look at that, we saw trade talks with China resume this week. Those have reportedly made some progress. They're coming back to the table next week. Are we still, whether it's trade talks in China or African swine fever, is that really the big driver behind our hog markets continually right now?
It certainly is going to be what gives us the volatility, I think, and everybody's still trying to figure out exactly what does ASF mean. You know, I like to continue to remind folks that the Chinese could eat less pork, so we know production is going to be down. It's just how much pork are they going to consume? How much are they going to be willing to import? Prices are much higher for pork in China, so that may curb Chinese consumers' interest in pork consumption this year. So we'll wait and see, but just so much uncertainty from week to week in terms of what we get at the end of the day.
I think one of the interesting things that I saw this week was that Argentina and China came to an agreement on pork. And as you take a look at that, while they may not be large producers of pork or be able to take a big chunk out of that potential demand, it still shows that as long as we have this tariff game going on, regardless of how good of a provider we are, they're going to look other places for the products that they need.
Yeah, when you think about the overall tariff on our products going to China being greater than 60%, it tells you there's a lot of folks that can compete that might have lower tariffs, and so it's not just the additional tariff ramp up that we saw last year that matters. It's the cumulative of all the tariffs that we face that certainly makes our product a lot more expensive landed into China.
All right. So we know volatility on the global market is going to continue to be a driver for the U.S. sector. That means we've got to look at domestic demand and a couple of reports this week that we're going to talk about. Let's start first with Restaurant Performance Index. How did March 2019 end up? Yeah,
so when you look at that overall Restaurant Performance Index for March that we got this week, it came in at 101.9. The first increase month to month that we've seen since late 2018. So really some strong news there. And I think it's one that we want to at least appreciate that's being helpful to the market side. The current situation index, so that Restaurant Performance Index has got a current situation and an expectations. We've been driven a lot by what's been happening with the expectation side, but the current situation index in March came in at 101.8. A lot of strong same-store sales driver there in that current situation index. Same-store sales came in at 103.8. All that to me says current demand has maybe been fairly robust when you look at it from a restaurant side. The expectation still gets strong as well, a 102.1 out of that March report. Also strong as folks expect traffic in those restaurants to continue to increase for the remainder of this year.
And I would assume with the jobs report that came out today, that adds even more expectations that we're going to see strong and continued growth maybe in folks eating out.
Yeah, so I might say spectacular. When you look at the jobs report this morning, that might be a little too strong of an indicator, but 253,000 jobs in April. We really exceeded pre-report expectations by roughly 60,000 jobs. So a much stronger report than anybody anticipated going in. Unemployment rate went from a 3.8 to a 3.6. That 3.6% unemployment rate we haven't seen for 50 years. So a new 50-year low in terms of unemployment rates. I guess for me, the good news there is, we've been seeing some signs of the domestic economy weakening. But when you put a jobs report like this in the bank, I think it, to me at least, suggests that maybe domestic demand will hang with us better in 2019, and the economy here in this country is maybe doing better than some of the other news that we've had the last couple of months.
Trade and domestic demand, those are two kind of the big things for us this week. You've had a pretty busy week as well. You were testifying earlier this week talking about USDA's new dairy margin coverage program. Let's talk a little bit. We're going to shy a little bit from livestock this week and talk a little dairy. Let's look at this new DMC program and what are some things that producers need to think about as they're looking at its availability.
Yeah, so number one, producers are going to, in June, start to have the ability to sign up, and that's going to be retroactive to January of 2019. I like to remind everyone that the new dairy margin coverage program in the 2018 Farm Bill provides a much stronger safety net than we had in the 2014 Farm Bill. Too often, I think producers, number one, did not like the old margin protection program. They felt like they paid large premiums in and got very little support in return. And with DMC now, we're talking about another $1.50 increase in their in the level of margin they can cover. I like to equate that to, you look over the 2000 to 2018 period, that would have at $9.50, we would have gotten payments 90% of the time in the industry. Under the old margin protection program, it was just about 40% of the time we'd gotten payments. So that's a very different program. I don't want them to make decisions based on the old program. I want them to look at the new program. And the good news for them is they're going to have a few months under their belt of what margins have been like. And I think it's going to become pretty clear what they should sign up for, given the payments they would already receive on the first few months of 2019. So
basically look at your information and make an informed decision as that sign up nears.
Yeah, absolutely, and maybe going to the coffee shop's not the best way to make that decision, and so spend a little bit of time of thinking about. And you and I talk a lot about risk management. For me, DMC is a risk management tool. Too often, I think sometimes we talk about how do we maximize the revenue from the program. I just remind producers that how do I cut that downside risk off to make sure that I'm in business long term. And as you know, it's been a tough time for dairy producers the last few years, and programs like this, I think, can be helpful in managing that downside risk.
All right, Scott, anything else this week?
I think that's been the major things that we've seen this week.
As we look ahead to next week, a couple of reports that we definitely want to keep our eyes on. Yeah,
absolutely. So USDA is going to give us their monthly WASDE report next week. We'll also get a shot of monthly trade data to see where trade's been going, and finish as well with some retail prices next week.
All right, Scott, have a great weekend. We will talk to you next Friday.
Sounds great, Megan.
To have our weekly livestock market update delivered to your email box every Saturday, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.